Good afternoon and welcome to GrainTV. It's May 1st, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Well, Brock, let's jump into fire tip, see how the grains closed out the day on a Wednesday. We see July corn off 3.5 cents. Soybeans down 27 cents on the July contract. Chicago wheat down 11 3/4. Kansas City wheat down 9 1/4. We saw crude oil down almost $3 a barrel. If you guys want to watch these markets trade live for yourself, visit us over at GrainHedge.com. You can take a no-obligation trial of the platform that we use here. But Brock, a lot of red on the board today. It seemed like we had some outside macro forces kind of weighing on this thing.
Yeah, some economic data out of China in the overnight session really kind of pushed the markets lower, especially that soybean market.
Yeah.
What came out of China was some manufacturing data that showed pretty slow manufacturing pace compared to what it was last quarter. So that really weighed on what the demand prospects were for soybeans in particular being shipped over to China.
Right.
So I think that's why we saw soybeans down over 27 cents here today. But that really flowed over into our macro markets as well here domestically. The Dow Jones was off pretty substantially. Like you said, crude oil was off about $2.50 a barrel. We saw the S&P off pretty sharply. And piggybacking on top of that is the Fed coming out today and reaffirming that maybe our economy is not growing as fast as what we would like. They basically said that they're going to keep the interest rates low to try to provoke some buying, some borrowing of some loans and that sort of thing. And the way they're doing that is buying treasuries and buying mortgage bonds to keep the interest rates rather low right now. Right. And they said they're going to keep it like that until unemployment reaches about 6.5%. Currently we're sitting at 7.6%, so that's going to be quite a while, or not in the foreseeable future, that we're going to get that level.
Right, so it seems like the Fed's not really pleased with the state of the recovery, I guess, at this point. It certainly seemed like it weighed on things in general today. Corn was comparatively stronger today than soybeans and wheat. Seemed like the EIA ethanol numbers that we had out today could have been supporting that a little bit. We did see a marketing year high in terms of ethanol production, 857,000 barrels per day reported last week in that EIA report. As you can see here, the red bars are weekly production figures. The green line is our anticipation for production here. And as you can see, moving forward, we're looking for a sizable uptick in production. And that's really been driven by an improving ethanol crush number here throughout really since that March 1st quarterly grain stocks report. We've seen ethanol crush really improve, and we've seen production pick up accordingly. In our minds, though, we're still thinking that the USDA is overestimating corn going to ethanol by about 50 million bushels, and a revision will be needed here at some point in a WISDR report. Certainly that should weigh on old crop corn here. Seems like one thing, Brock, kind of to switch gears here is export sales have not really supported corn either in the last couple weeks. Tomorrow we are going to be getting the export sales report. What's kind of trade expectations there? What are we looking for?
Yeah, if we're looking at old crop sales for tomorrow's report, wheat is expected to be 150 to 250,000 metric tons. Corn to be 250 to 350,000 metric tons, and soybeans to come in at 100 to 300,000 metric tons. So not substantial sales expected in the old crop. There is some new crop sales expected as well, but I think the old crop's really going to be the focus tomorrow.
Yeah, people will probably be watching wheat there closely. Wheat's had a couple weeks of exceptional sales. We'll be tweeting about that report as it comes out on Twitter, at GrainTV is where you can find us over there. And as I said, if you guys want to get live quotes at your home or office, visit us at GrainHedge.com and start your free trial today. In general, though, Brock, that's kind of what we saw here for a Wednesday in the grain market. Thanks a lot for joining us here on GrainTV. Have a great night. We'll see you tomorrow for the export sales report.
Well, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur. But when you go to the Grower's Edge page, then it takes all that running around out of it for you.